students, welcome to Sunil's tutorial. I'm Sunil Milwani and today we'll be doing this chapter called as internal reco. We are going to do illustration 5. In the books of Messrs. Siddhant Limited. Right, let's start. Now, in order to keep things simpler, always write this rule on the right hand side. That will make things easier for you. LAAL. Debit, credit. The following scheme of reconstruction has been approved. Write off fixed assets by 20%, debtors by 15% and stock by 55%. Assets going down, capital reduction on the debit side. So capital reduction account debit to fixed assets to debtors to stock. Right? Fixed assets by 20%, 21 lakhs. So that's 4,20,000. Someone please cross check. 21 lakhs. Right? Debtors is 15%. Debtors is 15 lakhs. So 15%. 2,25,000. Someone cross check please. 15% of 15 lakhs. And stock by 55%. Stock is 20 lakhs. So it will be 55% will be 11 lakhs. Right? Someone please add this.
174 5,000.
174 5,000
17,45,000.
being assets written off. Next, preference shares to under preference shareholders to forego the arrears of preference dividend. Do you have preference dividend in the balance sheet? No. Are you paying this? No. You don't have it in the balance sheet. You are not paying this, so no entry for that. Next, directors give a temporary loan of 5 lakhs to the company. Loan, money is coming in. Bank account debit, and you are creating a new liability to director's loan. How much is the amount? 5 lakhs. Being loan received. Next, the company settled tax liability to the extent of 5,40,000 and to meet the expenses of reconstruction amounting to 10,000. Now the company settled the tax liability to the extent of 5,40,000. Tax liability is 5 lakhs and they are saying that you settle the tax liability to the extent of 5,40,000. Now, like you're paying your liability, debit the receiver, provision for tax debit, you settled it, money is going out to bank. Provision for tax is given to you as 5 lakhs. You've settled it for 5,40,000. Difference is capital reduction. Being tax liability paid. Next, and it met the expenses of reconstruction. I'm paying reconstruction expenses. Money is going out. The word reconstruction expenses is not there in the balance sheet. Hence, I will not use it in the journal. Instead of that, I'll write capital reduction. So capital reduction account debit to bank amount is 10,000, being reconstruction expenses met. Next, sundry creditors to give a remission of 20% of their claim and a company to allot 11% preference shares of rupees 100 each, fully paid in settlement of the balance amount. Debit the receiver. Sundry creditors account debit. They give remission of their claim, that means cancelled. I don't have to pay them. Liability going down. Liability going down, that means capital reduction on the credit side. So to capital reduction. And for the balance amount, they are saying that you have to issue to them 11% preference shares of 100 each. 11% preference share capital. Right? Creditors are 36 lakhs. Right? Now someone please calculate 20%. 7,20,000.
Yes. 2880.
28,80,000. Right? Being creditors paid. Right? Next, 10% debentures to be converted into 13% debentures of 1,60,000 in full settlement of their claim. Debit what comes in? 10% debentures come in. Debit what comes in, credit what goes out. 13% debentures are going out. Right? Now 10% debentures as per balance sheet are 3 lakhs. The 13% debentures that you are going to issue of 1,60,000. Difference is to be written as to capital
1,40,000.
reduction 1,40,000 being debenture account settled. Next, equity shares to be reduced to rupees 2 each, fully paid. Now presently the value of equity share is 10 rupees. That means I'm going to reduce the value of equity share by 8 rupees. Liability going down. That means capital reduction on the credit side. So this is going to be equity share capital account debit. To capital reduction. Right? 8 rupees. How many shares do I have? I have 1 lakh shares. 8 rupees or 8 lakhs. 8 rupees on 1 lakh shares, 8 lakhs. Being liability revalue. Next. Equity shares to be reduced to rupees 2 each, fully paid, and 12% preference shares to be reduced to 1 lakh cumulative preference shares of 2 each. Right? That means 1 lakh shares of rupees 2 each means they have to be reduced to 2 lakh rupees. Presently the balance sheet value of preference shares is 7 lakhs. That means I'm going to reduce them by 5 lakhs. Right? The balance sheet value is 7 lakhs. I'm reducing it to 2 lakhs. That means I'm reducing it by 5 lakhs. Liability going down, capital reduction on the credit side. 12% preference share capital account debit to capital reduction 5 lakhs. Being preference shares revalue. Right? Next, to write off debit balance of profit and loss account and preliminary expenses. I need to write out the fictitious assets. Assets written off. That means the value of assets is going down. That means capital reduction on the debit side. So capital reduction account debit. 2. What does they say? You have to write out profit and loss and preliminary expenses. Preliminary expenses to profit and loss. Right? Preliminary expenses are 40,000 and profit and loss is 3,50,000. So this is 3,90,000. Right? Being assets written off. Right? Done. Now, I leave space for one journal entry and make capital reduction account. Leave space for one journal entry and make capital reduction account. Let's see this. Capital reduction on the debit side to fixed assets. 4,20,000 to debtors. 2,25,000 to stock. 11 lakhs. Then you have capital reduction account on the debit side again to bank. 40,000. Then you have capital reduction account on the debit side again to bank. 10,000. Then you have capital reduction account on the credit side by creditors. 7,20,000. Again credit side. Capital reduction on the credit side by 10% debentures. Amount is 1,40,000. Then you have capital reduction account on the credit side by equity share capital 8 lakhs. Then again capital reduction on the credit side by preference share capital 5 lakhs. 5 lakhs. And capital reduction on the debit side to preliminary expenses. Amount is 40,000. And to profit and loss, amount is 3,50,000. Right? Tally this please.
21,85,000.
21 this side is bigger.
Yeah.
21,85,000.
25,000 का difference.
21,85,000. The difference is 25,000. Right? One lakh 20,000, 1,40,000, 8 lakhs and 5 lakhs. 21 lakh. Okay, and on the debit side you have 4,20,000, 2,25,000. Stock. Someone please check 55% of stock.
So 55%. Sir, we have to
Okay.
reduce the value by 55%.
We have to reduce the value to 55%, guys. The value of stock is to be reduced to 55% and not by 55%. Now, if it is to be reduced to 55%, that means it is reduced by 45%. 45% of 20 lakhs is going to be 9 lakhs. Right? Someone please help me with this. 9, 10, 11, 11, 15 lakhs.
1545.
45. Right? So in that case, this is going to be 9 lakhs.
2160.
This is 2160.
1,71,000.
How much is the difference?
1,75,000.
1,75,000. This is going to be to capital reserve. Guys, when you are making your capital reduction account, you immediately come to know whether your journal is right or wrong. You should unless until specifically given the sum, you should always get your balance on the debit side, right? Let's post this into a journal. So this is going to be capital reduction account debit. To capital reserve. $1,75,000. 1,75,000 being capital reduction used. Okay, now let's make the balance sheet, guys. Liabilities, rupees, assets, rupees, right? Authorized share capital. Not given to you, put question mark and tally it off. Then issued and subscribed capital. Issued and subscribed capital. First of all, you will have equity share capital. Equity share capital is given to you as 10 lakhs. Now let's look at the journal. You have on the debit side 8 lakhs. So 10 lakhs minus 8 lakhs, 2 lakhs. Then you have 12% preference share capital. Preference share capital. In the balance sheet it is given to you as 7 lakhs. And here it is given to you on the debit side as 5 lakhs. So 2 lakhs. Right. Next you have reserves and surplus. In reserves and surplus, you will have capital reserve. Capital reserve is given to you as 1,75,000. Then you have secured loans. Under secured loans, you have 10% debentures. 10% debentures. Okay, guys, you also have 11% preference share capital here. So in your issued and subscribed capital, there is 11% preference share capital of 28,80,000. You have 11% preference share capital with your subject creditors. Okay, let's look for debentures. Debentures on the debit side, nil it will become. Debentures was 3 lakh minus 3 lakh nil, and you have issued new 13% debentures. New 13% debentures of 1,60,000. Right? Secured loans, then unsecured loans. Not given to you. Then you have current liabilities. In current liabilities, you have creditors. Creditors are 36 lakhs, and in the journal, entire 36 lakhs. So nil. Right? Provision for tax. Provision for tax is 5 lakhs, and in the journal you have 5 lakhs. So nil. Let's move on to the asset side, guys.
So उसमें P&L बाकी है. Profit and loss.
Fixed assets. That's your asset side P&L. Right? Fixed assets is 21 lakhs minus 4 lakhs 20,000. Someone please do that.
4 lakh. 16 lakh 80,000.
16 lakh 80,000. Right? Then you have investments not given to you, nil. Then you have current assets. Under current assets you have stock. Stock is given to you as 20 lakhs minus 9 lakhs. 11 lakhs. Then you have debtors. 15 lakhs minus 2 lakhs 25,000. So that is again 12 lakhs 75,000.
Yes.
Then you have bank. Someone please calculate bank for me.
Bank is 4.
Bank was
50,000.
1 lakh 10,000 here. 1 lakh 10,000 plus 5 lakhs. Someone please go on doing that.
610.
Minus 5 lakh 40,000 minus 10,000. That's it.
60,000.
Right? Then you have preliminary expenses. Preliminary expenses is 40,000 and here it is on the credit side, so nil. Then you have profit and loss. This is that profit and loss that you were talking about. That is 3 lakh 50 and 3 lakh 15 nil. Now we had also issued this, we have issued a liability of director's loan. Now director's loan is an unsecured loan. So your unsecured loan will not be nil, but you will have director's loan there. Director's loan is 5 lakhs. I presume we have passed all the entries from the journal, right? Someone please
41
check.
lakh 15,000.
41 lakh
15,000.
15,000. So this is 41 lakh 15,000. Balance sheet tallies. We'll stop this here for the day. Thank you very much.